Melbourne property is tipped to outperform Sydney next year. SBS Finance editor Ricardo Goncalves joins us now with the details.
Yeah, Anton, house price growth is expected to ease to its slowest pace since 2012, with SQM Research predicting prices will rise between 3 and 8% in 2016 nationally. Now, across the country, and assuming we do see one official interest rate cut from the Reserve Bank, house prices are predicted to continue to fall in both Perth and Darwin. But the real action is on the eastern seaboard. Brisbane prices will rise 8% at best, while Melbourne will pip Sydney as the city with the best capital growth.
874 homes were listed to go up for auction in Sydney at the weekend. 530 actually went under the hammer. Only 383 sold. A clearance rate of just over 65%, the lowest Sydney has recorded since 2012.
Came on the back of the announcement by Westpac last week that it was going to raise its interest rates to owner-occupiers, so perhaps spooked the market.
Some parts of Sydney spooked more than others.
Still probably a seller's market in most areas, but you know, some of those outer western suburbs in Sydney recorded clearance rates in the mid-40s on the weekend, and that really does indicate that buyers have the upper hand in those markets.
Melbourne fared better than Sydney and the national average, with the clearance rate of 73%. That better performance is expected to flow through to property prices next year.
We're seeing in the market right now a situation where listings are falling fairly rapidly in Melbourne. We're also seeing lower vacancy rates, which is pushing up rents. All the triggers are now right for Melbourne to actually excel in capital growth.
The general advice for sellers across the country is to temper their expectations. For buyers, it's to do their research.
They shouldn't be aggressive in the marketplace. Now is not the time to just bid any price for a property. You really need to go out and get a valuation.
The Reserve Bank next meets on Melbourne Cup Day.